So guys, welcome to the Nexoel Trading Hub YouTube channel. So we are going to be looking at the forecast for the coming week, and this is the dollar index and this is the monthly time frame. We can clearly see how price have been respecting the monthly fair value gap, trading above the consequent encroachment of that monthly fair value gap. And we can see how the price is trading into the last up close candle before this bearish movement to the downside. So for the dollar index, we are still expecting more bullish movement to the upside, since we can see clearly that price is respecting the consequent encroachment, price mitigated the consequent encroachment, and we are having higher prices to the upside. In extension, this is our drawn liquidity, the buy side liquidity. So let's check the weekly time frame so that we can begin to have our perspective for the coming week. So this is the weekly time frame. If you guys have been following the weekly Forex forecast, I made emphasis regarding this breakout block in confluence to this fair value gap, and this is also in confluence to the monthly fair value gap zone. We also have the weekly fair value gap, and within the weekly fair value gap we can see this breakout block, because this sponsored the last bullish movement to the upside, and then we have the fall of price to the downside. We have price took out this low, took out this low, in extension took out this low. Now we can see the return. Now we clearly saw last upper week how I told us to expect to see price will fall to the downside, to the possibility of mitigating this weekly fair value gap, and we frame more bullish movement to the upside. So clearly we can see here price give us that dip to the downside, and we have the bullish rise to the upside, though price did not really mitigate the weekly fair value gap. But in the lower time frame, we identify a zone for a buy reason, and we can now see that price is trading above the consequent encroachment of this breakout block. And in confluence, in a daily time frame, we have a daily bearish order block, and that is where price is also reacting. That is why we are seeing the price failing to give further impulsive movement to take out this previous week high point with volume closing above it, because we have now prices actually conflicting between two sponsorship zone. We can see this weekly breakout block, and there is a daily bearish order block resting within this weekly fair value gap here. So now clearly we can see anyway that price is still giving us more bullish momentum to the upside. Now we can see price fell to the downside, but then volume still went ahead to close above the consequent encroachment of the weekly breakout block. So we can see the possibility of higher prices in the dollar index and not necessarily price dipping to the downside. But let's actually now check the daily time frame for the possibility of zones we can consider for the coming week to anticipate the trade execution we look forward to take. So let's go to the daily time frame. So here in the daily time frame, what we can clearly see here in the daily time frame, we can clearly see, last week I called out this fair value gap and told us to anticipate the dip of price, because we saw price reacting at the daily bearish order block, which we can clearly see here. Here is that daily bearish order block. We have the up close candle before this bearish momentum movement to the downside, and we can now see that price respected the call I made regarding the dollar index last week for us to see the dip of price to the downside, for price to mitigate this daily fair value gap, and we can begin to frame bullish rise of price. And this is now our draw on liquidity. So last week high is now our draw on liquidity. So I want to see for the bullish move for price to take out this buy side liquidity. So this is our draw on liquidity. Now what we also identify from a lower time frame last week is the liquidity within these bullish candles, and that was why I called out this daily fair value gap for us to anticipate mitigation of that, and then we have the bullish rise. And now we can see we are having a bullish candle trading to the upside. So we could see price facing rejection again at the daily bearish order block, and then we can now see the possibility of having a pullback and then have that bullish continuation to the upside to take out this buy side liquidity. So let's check the 4-hour time frame so that we can have a clearer picture to the zones we can anticipate to look into. Now we can see, I spoke about the daily bullish candles, how I identify a liquidity zone. Yeah. And we can clearly see that we have this trend line liquidity. And this is that daily fair value gap that price return to mitigate. Now in the 4-hour time frame, we cannot really clearly see a zone. But then since we have this bearish colored candle, took out all this trend line liquidity, mitigated the daily fair value gap, and now we are having these bullish movements. And what we can clearly see is that price is giving us up close candles, so we can wait to see the reaction of price at this order block. So basically, in extension, I'm seeing we could see price push to the upside. Price may face a reaction at this bullish colored candle, which is the bearish order block. And you can see we have this rejection block zone. So we could see now price give us a fall to the downside. You could wait to see how price would take out this bearish candle, and we have the rejection block, which is giving us the bearish order block zone, and we have this rejection block zone, and then we can frame our entry upon the return and then the push of price to the upside. So this is my anticipation for the dollar index. We want to see this reaction for price to further continue to the upside to take out the buy side liquidity. So you want to clearly wait to see how price is going to react at this bearish order block first. In confluence, you have a rejection block because this gave us this week that took out all this liquidity here, and we had this bearish movement that further took out this sell side liquidity, this trend line liquidity, and now we are seeing that we're having more bullish candles, up close candle. So we could wait to see the reaction here, a pullback which will come mitigate, possibly price will give us an impulsive movement that will create a fair value gap. Price will return to mitigate that fair value gap. We have a further push. So in case you do not take an entry upon price giving you a likely fair value gap at this zone, you could wait for price to take out the bearish order block. In confluence, you can see you have a rejection block, and then upon return you can trade to the upside to take out the buy side liquidity, which is our draw on liquidity. So this is my expectation in the dollar index, except price decide to move in the opposite direction, but I'm still expecting more bullish movement of price to the upside in the dollar index. So guys, let's check out the Euro USD pair. So this is Euro USD, and this is a monthly time frame. We've been looking forward to see more deeper fall of price into this monthly fair value gap. So you can see that the Euro USD is in the opposite of the dollar index. So if we're having a strong dollar index movement, a bullish movement in the dollar index, then we should keep anticipating to see bearish movements in the Euro USD and GBPUSD and other pairs where the USD is the quote currency. So we can see how price is still within this monthly fair value gap, though we can see that price is trading above the main threshold of this monthly fair value gap, but we are still expecting more bearish movements in the Euro USD pair. So let's check the weekly time frame. So what we can see clearly in the weekly time frame, price failed to take out this buy side liquidity. Price has been attracted to the sell side liquidity. And from last upper week, I called out the zone where we want to see a likely rejection of price, and then we have a bullish movement before we can see further bearish movement of price to the downside. And we can see clearly how price here have been respecting the consequent encroachment of that institutional sponsorship candle here, because this is the bullish candle that sponsored this bearish movement. Price gave the impulsive movement and took out this sponsorship candle. In confluence, you have a fair value gap here. Now what we can see is that now price have returned to that zone. We are having rejection of price to the upside, price failing to close below the consequent encroachment of that candle. So our anticipation is to see further bearish movement since we're expecting bullish movement. The dollar index is giving us a clear bullish expectation. So in the Euro USD, we could see further bearish movement of price to the downside. So what we can see clearly here, we have the sweep of the previous week. So we could see a bullish movement before we have that bearish fall to the downside. So let's check out the daily time frame so that we can begin to frame our zones to consider for our price entries and our execution for the coming week. So let's check the daily time frame. So here in the daily time frame, what we can clearly see, last week we identified this trend line liquidity in the daily time frame, but then from the 4-hour time frame, we also saw another trend line liquidity within this bearish candle. So I told us price may not necessarily take out the trend line liquidity in the daily time frame to mitigate this institutional order flow. So what we can clearly see here is we have price give us this movement to the downside the last upper week. So we saw the fair value gap and anticipated to see how price is going to pull back into the fair value gap, mitigate the fair value gap, and then we can begin to frame bearish movement to the downside. And what we can clearly see here in the daily time frame, we can see how price mitigated the daily fair value gap. Volume closed below the daily fair value gap, and we can see also volume closed below this previous day candle high points. So we can see this is the open price. We have the close price to the downside. Volume is below this previous daily candle. And now we can see this other day failed to continue to the upside. Price still gave us close of the volume below this other previous day and this other previous daily candle. Now we can also see how this candle went to the upside, retested the daily fair value gap, and we have volume closing below. And also we can see that this candle took out this previous day candle high. Friday candle took out this high. Now what we can see clearly here, we have this fair value gap. So we'll be looking forward to see more bearish movement to the downside, and then we could see a bullish reaction at this fair value gap before we continue for the bearish to the downside. And this is our draw on liquidity. So basically we can see that the market is trading within this candle high and this candle low. So we are actually in a consolidated market state based on identifying daily profile. So we are in a consolidated market state because we can see that Thursday and Friday traded within the Wednesday candle. So now the anticipation is to see that market could take out the sell side liquidity, or market could journey to take out the buy side liquidity. But then since we are seeing that volume is respecting this daily fair value gap, so we could look forward to see more bearish movement to the downside, and this is our draw on liquidity. So let's check the 4-hour time frame. So here clearly in the 4-hour time frame, you can clearly see the trend line liquidity I told us about. In the daily time frame, within those bearish candles to the downside, we can see the trend line liquidity. Above that, we have this fair value gap, and we have this up close candle before further bearish movements, before we had this consolidation that gave us this trend line liquidity and further bearish movement to the downside. So we can clearly see in the 4-hour time frame, price traded into this bullish candles before the bearish continuation to the downside, mitigated that zone, and we can see further fall of price to the downside. And here we have a change in state of delivery, and we can see price pulling back because price is reacting at this 4-hour inversion fair value gap. And in Confluence, we also have another fair value gap here. This fair value gap was created before price for the push and took out a trend line liquidity. So we can see price respecting the fair value gap. In Confluence, it is for our inversion fair value gap. Now we can see price return traded to the upside. We have these candles that dip more lower. This mitigated this down close candle before the bullish move. We have this movement. Price gave us this high. We have a fall, but then we can see this candle also traded to the upside, took out liquidity. Now what we can see is that volume now is trading below this 4-hour inversion fair value gap. So we could see price dip to this bullish order block. So we want to see the reaction of price at this bullish order block before we continue to frame our further bearish movement to the downside to take out this draw on liquidity, since we're expecting to see more bullish movements in the dollar index. So for the EURUSD, before I would take this entry, I want to see price reaction within this bullish order block, which is in the daily fair value gap zone. So we could see price give us a displacement to the downside, a return to the upside, and then we want to see how price is now further going to give us an impulsive movement to take out this bullish order block, because we can see we have a rally, a base, a rally to the upside. So we want to see the fall. Price may give us a return to be reclaimed by this bullish order block, and then we have the fall of price to the downside to take out the sell side liquidity, which is our next draw on liquidity. So I want to see the reaction of price at this bullish order block so that I can now begin to frame the bearish continuation to the downside. Except the market decides to do otherwise, I'm still expecting more bearish movement in the Euro USD pair. So guys, let's check out the GBP USD pair. This is GBP USD, and we can clearly see from the monthly time frame, and GBP is giving us a very clear price delivery to the downside. We can see the impulsive bearish movement to the downside. Here we can see we have those relatively equal lows, though we can see clearly that we are still in the month of January, so the monthly candle have not yet closed. And here we have our sell side liquidity. Basically, this is our drawn liquidity. So I'm still expecting to see further push of price to the downside, though we can see price reacting at this rejection block zone from the monthly time frame. So let's check the weekly time frame to begin to frame our weekly expectation for the coming week. So this is a weekly time frame, and we can clearly see, this is the sell side liquidity we identify from the monthly time frame. You can see how price have traded below this swing low points, and now we have this weekly fair value gap. So am I saying that price is going to trade back into this weekly fair value gap before we have the bearish continuation? I don't think that is likely going to happen this week. So we can see we have this impulsive bearish movement, and we don't really have a valid sponsorship zone here that price would really want to respect to give a strong, likely bullish move before we have the bearish continuation to the downside. So I'm still expecting more bearish movement, since we can clearly see that the volume of this candlestick also closed below the previous week low points. So we could frame and expect more bearish movement to the downside. And our expectation is to see that we have the sell side liquidity taken out. So let's check the daily time frame. So this is the daily time frame, and what we can see from the daily time frame clearly is that we have the weekly fair value gap zone here, and we can see now price gave us this fair value gap in the daily time frame. So what we can clearly see also is we have price movement to the upside, and now we have price traded back into the daily fair value gap we have resting here. We had this rejection to the upside, price traded to the upside. We had the movement back to the downside into the fair value gap. We can see the volume of this bullish colored candle is within this fair value gap. And now we have price for the sponsored bearish movement to the downside. And we can clearly see that volume closed below the fair value gap. So this is Friday candle. We can see the bearish volume to the downside. We have liquidity sweep, and now we can see volume closed below this previous day candle. So we're expecting to see how price is going to take out this sell side liquidity, and in extension this sell side liquidity. So these are our draw on liquidity, and in extension we have this other long-term draw on liquidity, which is the sell side liquidity. So for the GBPUSD, I'm still expecting for the bearish movement to the downside, since we can see that price is failing to trade above this fair value gap to give us the possibility of a strong bullish movement to the upside. We are seeing how we have this rejection to the downside, and we can see that this candle on Wednesday took out Tuesday's high points. We have a sweep of this liquidity, and now we're seeing volume trading to the downside. This is the next drawn liquidity, and in extension we have this other sell side liquidity. So let's check the 4-hour time frame. I'm just giving you guys a very quick focus. I'm not dropping to far lower time frame. In the daily perspective, that is when I'll begin to look into that. So what we can clearly see now, last week I told us to expect to see that price would take out this buy side liquidity, and then we can begin to frame the bearish movement to the downside. But what we can see is that price did not take out this buy side liquidity, though we can see price traded to the upside, give us this movement to the downside. Price further went to the upside, took out this liquidity. Now we can see we had this fall to the downside. Clearly what we can see, the reaction of price at the daily fair value gap, we identify the bearish daily fair value gap. Now we can see how price now traded back below that daily bearish fair value gap, and now we can see the return of price to the upside. Price further gave us this movement, this bearish movement to the downside. what we can see is within the daily bearish fair value gap, price created this 4-hour bearish fair value gap, and we can see how this candle went to the upside, mitigated that fair value gap, and then we have price and volume closing below both the 4-hour fair value gap and the daily bearish fair value gap. So I'm expecting to see further push of price to the downside. So if we're going to have a price movement to the upside, we could look into this week, which in lower time frame you could identify a sponsorship candle. So I'm looking forward to see how price is going to drop to the downside, give us an impulse to the downside, possibly create a fair value gap, and then we have a return to mitigate that fair value gap, and then we can see price trade to the downside. So this is my expectation also for the GBPUSD, since clearly we can see here that price respected this bearish order block, and we saw the bearish movement now to the downside. Now price also trading below the fair value gap we identified from the daily time frame, the bearish fair value gap. So this is my expectation. We could see a sponsorship zone here in a lower time frame that price may give us a reaction to trade to the upside when we possibly see a displacement that may create a fair value gap, and then price would return to mitigate that, and then we have the bearish continuation to the downside. Price should take out the sell side liquidity, and in extension we have the sell side liquidity. So basically these are our draw on liquidity, except the market decide to do otherwise, since we are also expecting more bullish movements in the dollar index. So the GBPUSD, the EURUSD should give us more bearish movement to the downside. So this is my bias for the GBPUSD for the coming week. But wait, let's see what the market would reveal and deliver to us on Monday, and then we can begin to consider this forecast and how we can trade in line with that or against that. So guys, let's check out the AUDUSD pair. Yes, AUDUSD, and we can clearly see that, price took out the sell side liquidity. We expected and anticipated that to happen, and we can see price took out the sell side liquidity, and this is the next drawn liquidity I'm looking at. This is a rejection block candle, so I want to see how price would dip lower to take out the sell side liquidity. I'm not saying this is going to happen immediately. This is the monthly time frame, but the long-term expectation for the bearish movement is to see how price takes out this sell side liquidity, because we can see the bearish momentum candles to the downside, and we can see the mitigation of this monthly fair value gap. So I'm expecting to see how price is going to dip further lower to take out this sell side liquidity. So for the weekly expectation, we have to check out the weekly time frame, and here in the weekly time frame, slightly above that sell side liquidity identified from the monthly time frame, we can clearly see here we have this bullish order block, and we can see how price return mitigated the fair value gap of this bullish order block, and we can see again price gave this bullish movement, return to the downside. Now price have mitigated the open price of the bullish order block, and now what we can clearly see is when price mitigated that, we had this bullish movement that mitigated the weekly fair value gap. And in the previous forecast we identified the fair value gap in the daily time frame also, which we also saw the bearish order block in the 4-hour time frame, and then we framed the bearish movement to the downside, since our anticipation was to see the bullish move to mitigate the weekly fair value gap and then give us a bearish movement to the downside. So what clearly we can see here is that we have the volume of this previous week closed below this candle low, and now what we can see is that this bullish colored candle swept the low of the previous week. Now we are expecting to see further bearish movement based on our long-term expectation, and I'm looking forward to see price reaction at the main threshold of this bullish order block. So I want to see how price is going to dip more lower to the main threshold of the bullish order blocks, even though what we can see here, we have up close candle to the upside. So we can begin to go to the daily time frame to begin to look at possible sponsorship zone we can consider. So let's drop to the daily time frame. So here in the daily time frame, what we can clearly see is we can see this is that weekly fair value gap. You can see also in the daily time frame we have a fair value gap. Price pushed to the upside, took out the buy side liquidity, and then we have the fall of price to the downside. What we can clearly see is the return of price into this fair value gap. though I called out the implied fair value gap here and I said price could possibly dip higher into the fair value gap. And that is clearly what happened. We can see price dipped higher into this daily fair value gap, mitigated that, and we can see we're having down close price movement to the downside. Also, within this bearish colored candle in the 4-hour time frame, we identify a trend line liquidity that price took out. And now we can see now price is respecting this daily fair value gap. And also in this daily time frame, we also have this daily bullish fair value gap. This is the daily bearish fair value gap, which we're expecting price to respect and then give us the bearish movement to the downside. Now price traded back into the daily bullish fair value gap, and we can see price rejection to the upside. We have volume closing above this daily bullish fair value gap, but then we can still see that price is still below this daily bearish fair value gap. So I'm expecting to see more bearish movement to the downside. This is our draw on liquidity. We have liquidity grab here. Price took out liquidity. So want to see price takes out the external liquidity. Also, price have taken out internal. Want to see price further give us more bearish movement to take out this external liquidity. In a lower time frame, we identify trend line liquidities within this bearish colored candle in which price took out all those trend line liquidity. So let's go to the 4-hour time frame so that we can see a clear perspective to that. So here in the 4-hour time frame, you can see within the bullish daily fair value gap zone is this 4-hour inversion fair value gap. So we have this inversion fair value gap because we have for the impulsive bearish movement, price gave a pullback, fell again. This is an inducement, a draw on liquidity that we should expect to see how price would return to the upside to take out that liquidity, possibly mitigate the fair value gap, respect this up close candle, and then give bearish reaction. And we can clearly see price gave that bearish reaction, went further, swept this liquidity, went further to the upside to take out the trend line liquidity. So we have the daily bearish fair value gap. In confluence, we have this up close candle before the further bearish movement. But what we can see here is that there is no fair value gap. Price mitigated all fair value gaps, resting here and further went to the downside. Return mitigated that, fell to the downside. So here we have this inversion fair value gap. In confluence, the daily bullish fair value gap. And we can see how price, when price took out liquidity here, price returned into the daily bullish fair value gap in confluence to this inversion fair value gap in the 4-hour time frame. And then we had further bullish movement to the upside. Price mitigated the mitigation block. And now we have price falling to the downside. And we can clearly see upon the mitigation of the mitigation block, price fell to the downside. We can see price is respecting the daily bearish fair value gap. Price is not closing above the daily bearish fair value gap. We are seeing volume below that daily bearish fair value gap. Now we have price again returning and facing reaction at the daily bullish fair value gap. In confluence, we have the 4-hour inversion fair value gap. So we can see when price took out this liquidity, we had a bullish return. Price again went back into the daily bearish fair value gap, and we can see volume closed below that. Now we are having a bearish colored candle being formed. So for me to consider for the bearish movement to take out the draw on liquidity, I'm looking forward to see that price would take out this sponsorship zone. We could see a reaction at this 4-hour fair value gap, since we can see that price here did not fully mitigate the fair value gap. So we could see price react to retest this sponsorship zone, and then we have the bearish continuation to the downside down to our next draw on liquidity, which is the sell side liquidity. So this is my expectation also for the AUDUSD, since I'm expecting to see more bullish movements in the dollar index. So let's check out the NZDUSD pair. So guys, this is NZDUSD, and this is also the monthly time frame. So we can see we have this liquidity sweep, buy side liquidity sweep, and we can see how price have been moving to the downside, creating more liquidity, returning to seek those liquidity, price will fall. Now we can see price has been attracted to this external liquidity, this sell side liquidity. We can see this bearish impulsive movement to the downside. We identify the monthly fair value gap. We can see return into that. Now we can see we are having momentum trying to push further to the downside. So I'm looking forward to see how price is going to take out this sell side liquidity. Though we can see price reacting at this rejection block zone and giving us this movement that is not really voluminous to the upside or the downside. Though we had movement to the upside, but we can see the rejection back to the downside. So this is our next draw on liquidity, the sell side liquidity. So let's check out the weekly time frame. So here in the weekly time frame, what we can clearly see is price gave us that rejection to the upside, which we called out last upper week, and we can clearly see price return to the weekly fair value gap, mitigated the weekly fair value gap, and give us the bearish continuation to the downside. What we can clearly see is that volume here closed below the low of this bearish colored candle. What we have is that we can see this up close candle last week, but then we can still see further rejection to the downside. So my draw on liquidity is still standing, but I want to see how price is going to journey far lower to take out this sell side liquidity. Though we are seeing price reacting at the rejection block zone, but then we can see a push to the upside, but then momentum still went to the downside, though we have an up close week. So let's check the daily time frame so that we can begin to frame our zones of expectations. So what we can clearly see also in the daily time frame, you can see in confluence to the weekly fair value gap, we have the daily fair value gap. Price took out liquidity here, so we have liquidity sweep and we have bearish continuation to the downside. Within also this movement to the downside, we identify trendline liquidity within this bearish candles in the 4-hour time frame, I think. So what we can clearly see is price return into this fair value gap, and we can see the mitigation and rejection that price is facing at the daily fair value gap. So this is the bearish fair value gap. We can also clearly see how this candle swept this high and give us a movement to the downside, volume closing below the high of this bullish colored candle, and then we had the displacement to the downside. Price return back into the fair value gap. We can see price respecting the consequent encroachment of this fair value gap. Volume all closing below the consequent encroachment, and now we can see this bearish movement to the downside. We have this bullish fair value gap in the daily time frame, and we can clearly see that Friday gave us a movement to the downside, closing below this bullish fair value gap in the daily time frame. So we can see the return of price mitigated the daily bearish fair value gap, went slightly above to mitigate this rejection block, and we had this movement where price return reacted at this daily bullish fair value gap. So we have price respected this daily bullish fair value gap, which is from this candle high to this other candle low points. So we can clearly see that price return into it, and then price again for the push to the upside, reacted again at the daily bearish fair value gap, and now we have the fall of price on Friday to the downside and volume closing below the bullish fair value gap. So we could see for the bearish movement, and this is our draw on liquidity, this sell side liquidity. So this is our next draw on liquidity. So let's drop to the 4-hour time frame so that we can have a clear zone of expectation to see where price is going to face a possible bullish reaction to mitigate this as an inversion fair value gap, and then we have the bearish continuation to the downside. So let's check the 4-hour time frame. So clearly here in the 4-hour time frame, you can see the trend line liquidity I spoke about. So last week I told us to expect to see that the market would take out this buy side liquidity, and we can see clearly price went further to take out this and also mitigated this fair value gap in the daily time frame. But then we can see price went further to sweep this high points. Now we can see now price dropping to the downside, respecting the daily bearish fair value gap. We can see volume all closing below this daily bearish fair value gap. And what we can see is we have the fall leading to a change in state of delivery. Not really a clear change in state of delivery we really want to see, but now we can see price give us this pullback to the upside. Price further fell and took out this low point that price created. We can see volume closed below this swing low points. Now we can see the reaction of price within this fair value gap. Now we can see price now give us this bullish reaction. I think there was a news that sponsored this bullish reaction we're seeing here. price went further to mitigate and retest the daily bearish fair value gap, and we can see how volume later dropped to the downside. Now we can see that price reacted at the daily bullish fair value gap, so and also the daily bearish fair value gap, giving us this form of a consolidation. Now price respected the bearish fair value gap, dropped also below the bullish fair value gap. Now we can see how volume closed within this bullish fair value gap, and now we're having a bearish colored candle being formed, or that was formed on Friday. So we are going to see further bearish momentum to the downside. That is my expectation for the NZDUSD also. So I want to clearly see the bearish continuation to the downside. Price would sweep this low point and we could see a pullback to the upside, and then we have our bearish continuation to the downside. So this is my expectation for the NZDUSD also. So let's check out the other pairs like the USDJPY, and we'll also check out our gold pair for the coming week. Here we have the USDJPY pair, and this is a monthly time frame to the USDJPY pair. We can clearly see we have our inversion monthly fair value gap, liquidity sweep. So this is our drawn liquidity, the buy side liquidity. So clearly now what we can see is we're having this bullish impulse to the upside, and this closed above this candle week high points. And now what we can see is price here reacting at this monthly bearish order block. So am I saying that price is going to dip more lower into this monthly inversion fair value gap? I'm not really saying that. Since what we are seeing is that this candle has mitigated this other bearish colored candle week. So we could see more bullish movement to the upside. Price may not really respect this bearish order block if the DXY continues strongly bullish. So let's check the weekly time frame so that we can frame our expectation for the coming week. Now, last week I told us to expect to see how price reacts within this weekly fair value gap. In Confluence, we had this weekly inversion fair value gap that I also pointed out. So you can make reference to the previous week forecast for the clarity to this. So we can see how price mitigated this, fell to the downside, went up against that, violated that. So I told us to see how that will reclaim price, because in lower time frame we identify sell side liquidity here, which we're going to see in the lower time frame. So we can clearly see how price respected that zone and traded above it. So I'm expecting bullish movements into the upside and looking forward to this weekly fair value gap. I want to see how price is going to trade to the upside into that weekly fair value gap, because what we can see is price swept all these high points here, and then we had a down volume to the downside. Volume closed below the highs of this candle after price swept that, and in extension also swept this high point. Now we can see that sponsored this bearish movement back into this weekly fair value gap, in confluence to this weekly inversion fair value gap, and now we had this bullish reaction. So I'm expecting more bullish movements into this weekly fair value gap. But then let's look forward first to check those zones in the daily time frame and drop to the lower time frame. So here in the daily time frame, clearly we can see that the zone I called out in the weekly time frame, which is this zone, though we can see we have this order block, price did not really dip into that order block, respected this inversion fair value gap within also this weekly fair value gap. This is the sell side liquidity I pointed out last week, anticipating to see the dip of price to take that out, and then we can begin to frame bullish movements. But now what we can see is that took time before falling to the downside, because we can see that Friday gave us the bullish movement. Here we can see price created a bearish fair value gap, and we can see that volume closed below all these candle wicks. Now what we can look forward to see is how price is going to react within this bearish fair value gap before we strongly consider to go bullish to the upside to take out this buy side liquidity, because this is our next draw on liquidity. So we could see that price may react at this bearish fair value gap and possibly deep to want to react at this order block, but I'm doubting the possibility of that if the DXY continues strongly bullish. So we have to wait to see the reaction of price within this daily bearish fair value gap. That is what I would just say for now. So from a lower time frame, when you frame a bullish entry, you could look forward to take your profit within this daily fair value gap and wait to see what price is going to form, what the market is going to deliver, and then you can consider going further bullish to take out the buy side liquidity. So let's check the 4-hour time frame. Here in the 4-hour time frame, what we can see is price reacted at this close and open price. We can see at a very strong key level within the weekly fair value gap and the weekly inversion fair value gap. So what we can clearly see here is that we have this liquidity sweep, and now we are having bullish candles to the upside. Price created this fair value gap in the 4-hour time frame. In confluence, we have this breakout block. So we could see price react at this up close candle before this bearish movement. Price may dip to mitigate this fair value gap and then return into this daily fair value gap zone. So this is where I said you could target to take a profit, and then, or you could close partials and then look forward to see how price is going to journey more further to take out the buy side liquidity. So this is what I'm just saying, is we could see a dip into this fair value gap, and then we could have this movement into this daily fair value gap. Price may give us a reaction to the downside before pushing to break that. So when price closes above the daily fair value gap, then you want to take an entry upon the retest, because it's going to act as an inversion fair value gap, and then we could look forward to see price takes out the buy side liquidity, which is our next draw on liquidity. So this is my expectation for the USDJPY pair. So guys, let's check out the gold pair. So guys, this is the last pair for the weekly forecast for the coming week, and this is gold, and here's the monthly time frame. I told us to see how price is going to take out this buy side liquidity, but then I told us to anticipate the possibility, the likelihood that price may take out the sell side before continuing bullish to take out the buy side. You can make reference to the weekly forecast for the previous week so that you can clearly see that. So what we can see from the monthly time frame, we can see how price respected the consequent encroachment of the monthly fair value gap. Close to above that, we have liquidity sweep. Price read to the downside. Price did not push to the downside to take out sell side or buy side. Price is still within this monthly candle zone, and we can also see this is still within this monthly candle zone and also this monthly candle zone. Since what we have is that this monthly candle took out sell side liquidity, so we could see this for the push to take out buy side liquidity. And DXY have been bullish, and then gold also have been giving us a bullish movement. So there is a correlation crack in the USD and also the gold. So what we can now clearly see is price have traded to the upside. We can see volume giving us bullish movements. So we can clearly see that the coming week will take out the buy side liquidity. So let's check out the weekly time frame so that we can begin to frame the weekly expectation. This is the monthly time frame. So I'm looking forward to see how price will take out this high points. So let's check the weekly time frame. Here's the weekly time frame, and clearly we can see price reaction within the monthly fair value gap zone. We have the weekly fair value gap. Price reacted at that, gave us this bullish movement. Price fell, failing to take out sell side liquidity. Price took out this buy side, failed to take out sell side. We have this return to the upside. Now what we can clearly see is that we have a sweep of this candle low points. Price give us a volume to the upside, further sponsoring bullish movement. Volume close above this previous weekly candle. Now we can also see here volume closing above this other previous weekly candle. So we could see for the bullish movement to take out the buy side liquidity. If price is going to push higher, we're looking forward to this rejection block zone here in the weekly time frame. So we're going to drop to the daily time frame so that we can begin to frame expected zones we are likely going to be looking at. When price reaches those zones, how we can expect to frame the bullish move and also have a possible bearish expectation. So let's check the daily time frame. Yet in the daily time frame, last week clearly I told us to wait to see the reaction of price at this order block. Upon return to this daily inversion fair value gap, if price breaks the daily inversion fair value gap, then we could expect a retest and then the bearish movement to the downside to take out this liquidity, in extension, this liquidity. But now what we can see is price also now respected the order block, and I told us we could see if price doesn't break below this inversion fair value gap, then we could see the inversion fair value gap will be respected. Price will react at the bearish order block, retest it, and then we have the bullish movement to take out the buy side. You can make reference to that in the previous week forecast. The video is on the YouTube channel. I'm not cooking up stories here. So you can make reference to that and check that for yourself. So what we can see is that price faced mitigation at the bearish order block, retested the daily inversion fair value gap. And now we have this bullish reaction. Price is being attracted to the buy side liquidity. This is our drawn liquidity. Now you can clearly see the weekly rejection block zone I marked. Slightly above that, we have this daily fair value gap and this bearish order block. So now my expectation is to see the possibility of price returning into this daily bullish fair value gap. In confidence, you can see we have this bearish order block that was violated to the upside. So we could see a return to retest, and then we have the bullish continuation to take out the buy side liquidity. So not minding that the dollar index is giving us a bullish movement, and I'm still expecting to take bullish move in the gold pair. I told you guys there's been a correlation crack between these asset classes. So let's check the 4-hour time frame. So here in the 4-hour time frame, what we can clearly see is how price reacted at the daily order block, the bearish order block. Here we can see is the 4-hour fair value gap. Price return at the daily inversion. Now we have the bullish movement. Now we can see that the 4-hour fair value gap is going to act as an inversion fair value gap. Now this is the daily bullish fair value gap zone, and within that we have this order block, this down close candle before this bullish movement. So this is my expectation for the gold pair. It is either we see price respect this 4-hour inversion fair value gap and gives us the bullish movement to take out the buy side liquidity, which is our draw on liquidity, or we could see price dip lower into the daily fair value gap, because we now also have this bullish order block. We could see this reaction, and then price would now trade higher to the upside to take out the buy side liquidity. So these are my two expectations in the gold pair. So I'm going to be looking at price delivery to see how this delivers, and then in the lower time frame the entries. So cheers guys, till I meet you guys next week. God bless you all.